Hello everyone, leverage. That is what is on my mind today. So we're gonna chat about leverage. So what is it? When to use it? How? What? Where? Who? Why? 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 Why are we using leverage? Leverage. So what's the deal? So imagine you are, trading. You're trading. All is good. All is well. And then you go and you buy here. You sell here. And the market did something like this, and you make this profit. You make this profit X. Now, let's say usually on the exchange, you get this sort of dial, and you're like, bang, 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 and it's like 2x leverage, 5x leverage, 25x leverage, and you use the slider and you choose however much. And what happens is, you pick 25x leverage and you made 20x times 25, right? Or maybe that looks much better, 25x. But also, um, what could have happened is maybe the thing went down, right? And so you also would lose. You'd lose like so maybe you go here and then your loss was like in this world you actually lose money. You lose Y, but you actually lose 25x times Y. So it's like free money almost, right? But it's like you're borrowing money and you have more power, but your losses are amplified and your gains are amplified. So how can we practically use this in trading, right? So you've got these crazy things that are like 100x leverage, 50x leverage, I would stay away from those guys. That's nuts. Because this is how things actually work when you're trading. So you're going along, the market is pretty random actually. It goes like this. You buy here. And so ideally, it'll sort of go like this, it'll go like that, it'll go, it'll go up. And ideally, and then wherever you want to sell, maybe you sell there. You want to sell above your entry price. Okay, cool. The thing is, right, how leverage works is as you increase the leverage, the point at which you are going to get liquidated sort of moves up if you're entering a buy trade, right? So maybe you enter 50x leverage, and then the exchange has a special formula, which is like you can just go find it and look at it on their docs. So the price at which you're going to get liquidated is going to be here if you're on like 50x leverage, right? Now, say you actually turn the bar up to 100x leverage. What'll happen is this line will move up. So you get liquidated closer to the entry price here. You get liquidated closer to the entry price. So what you have to do is you have to pick an appropriate leverage level so that whatever drawdown you experience, so maybe this is the max drawdown here, your liquidation price, right? Your liquidation price is going to be below whatever max drawdown you have before, and then after this drawdown happens, usually like it'll either like, well, it could just keep going down and the market's crashing, which is happening right now, or it sort of draws down a bit and then it comes in green and then you're all good and you get out whenever you need to. So you need to pick the appropriate leverage level. So, 2x, 5x, whatever, 10x is, all those kinds of things. But 100x will just kill you because it'll be so tight. Like this is where you got in, and your 100x leverage will be there. There's like no wiggle room at all. You'll just get liquidated, or your money will be gone. Yeah. So that's something I think about when I trade. Yeah, but what I encourage you to do if you're mathematically minded or coding minded, have a look at the leverage formulas on the exchange and try code them out and make some cool simulations and things like that. And post them in the comments. Show me all the cool work you've been doing. Okay, here's a little lesson. I hope you learnt a little bit about leverage and how to think about it, and I'll see you in the next video.